Today's topic, we're going to talk about how do you improve yourself to become a professional trader. Can you do it as a normal person without any degrees or something related to finance? So, do you think you can do it in the first place? It's actually not that difficult to become a trader, as there's a lot of information online nowadays, unlike the old days where there's basically nothing much that you can learn about. In this episode, we're going to talk about how do you become a trader in the first place. As a basic trader, what do you need to know about being when you're starting to trade in the market? First thing, you have to trade using a paper trading method, just like this one, paper trading method. So you train yourself, try to train your discipline. How do you make trades? What is the criteria that you plan to do? What is the criteria that you can take a trade or you don't take a trade? So, well, it's gonna be a long one. Most importantly, in my opinion, that you should know at least when is the positive and when is the negative, when is the bullish and when is the bearish. So the basic, as always, the moving average line. This is very, very important. Many people think that this is not that useful kind of indicator, but in fact, this is the most used indicator in the world. So all you have to do is put a 200-day moving average. Anything above it is a positive, is a bullish method, and anything below it is bearish. So when it's bullish, you should be aiming to buy, and unless you're a professional like DNF, who actually pulls buy trade on the short side when they notice this kind of trade over here, like this kind, he can actually catch the trend downwards. So he's a special case actually. So let's not try to be that professional yet. We'll try to be basic. So the basic is anything above, yeah, you look to buy, and anything below, look to sell. So I'm a momentum trader and I trade with the trend. So for now, look at this chart. It's above the 200-day moving average. So this is Google. So all you have to do is aim to buy. When do you buy actually? There's a lot of people with different opinions on when to buy or where to buy. So that is what the next important thing is. The second most important thing is identify the levels that can appear on a chart, like this kind of important highs, all the important highs, and also the important lows. So you identify the lows, the more important lows. So when after you identify where it is located, you will somehow know that it shows that where is the support and resistance area. As you can see here, this is because it actually works as a zone instead of as a zone instead of a line. So like this one, for now, check out this one. Here, this is a previous high at the time, which is 2021, late 2021. So after the prices went down all the way down and touches the 200-day EMA, after it touches the EMA, it had a bounce. So this is what we call return to the mean. Means this is the mean of the price of this stock. So after it returns here and a bounce upwards, it means the trend is still on the go towards the higher high. So this is a very important point. as you can see here also. As you can see, it's a very well respected area. So if you're trying to trade this kind of stock, like here, most current is here. So if you try to trade this kind of stock, you know this is a very important area, right? It's a very important area. So all you have to do is wait for stocks to go into this zone. Check out the momentum. If the momentum slows down like this kind, and you can buy somewhere here, start buying in here, and then set your stop loss maybe the 200-day EMA or maybe below it. Depends on how you trade or what's your risk reward ratio. So if let's say we're going to do this kind of where do we put that thing? Okay, this one, I think, yeah, long position. So let's say you entered somewhere here when the momentum slows down. So you entered here, and then you target, you aim for the previous high. Your stop loss is somewhere here. So you're actually risking about 10%, maximum loss of 10%, while your target is 40%. 60 points, so it's 40%. So the risk reward ratio is 3.73. If you're going to do this kind of trade, if it goes up to here, you tend to have make a lot of money, right? But then if you aim for less dramatic ones, like here is about 27%, this is quite a good play actually. The risk reward ratio, if you put it at 200 week EMA, you'll be 4.28. So this is quite good. You are risking 6% to make 27%. So this tool actually allows you to estimate how much are you going to make if it goes your way, and how will you react. Will you cut your loss where you should cut your loss, and how much is you're risking and how much you're making in the event that it goes really your way. So yeah, another thing is whenever there's a pullback, momentum slows down and going to bounce near this importance level, expect it to at least touch the previous highs is here before having some kind of pullback, then continue upwards to break this high. It might pull back one or two, or even bounce around here before going up. So just let you be clear about it. It can go up all the way to this previous high, then come back down and maybe consolidates a bit before breaking upwards. But then there is also a chance that this is some kind of fluke, and then this thing actually peters out and it goes crashing downwards. This is also a scenario that might happen. So we are not going to remove everything, all the possibilities. Just highlight what you expect it to do. But then the momentum here is looking good. Google, if you're buying, you bought in somewhere here, you should be making money when it goes up all the way up here. So this is good stock actually. But this is a weekly chart, so it will take some time for it to break. Okay, this is good, looking good also. Strong downtrend finish. It breaks the okay, let's draw it down. So it breaks this one, consolidates here and bounce back. It's good. It's a very good sign, this one. So it will go up all the way here and then somehow consolidates around this moving average, maybe here, up and down before breaking out. So this is a high possibilities, as the downtrend actually ended here. So this is a very good entry point. Okay, after what I've highlighted, the entry points and everything, I also mentioned that how do you place your stop loss? Hopefully, it's below the previous the candle wicks, because a lot of people put their stop loss at the wicks there at the end of the week. So whenever people try to hunt your stops, they will try to like this kind. They will try to push it down below your like this one. They will try to push it down below your stop loss. If you set your stop loss here, you will have stop out here, and then it will bounce back up. So it's not really a good idea to sort of like have your stop loss that close to this place. It could have stopped you out here. So always put it below something significant like this kind. Something, the most you have to do is take a little bit bigger risk. So this one does look good in the long run. There should be some kind of bounce, but how high it should be, we'll know somewhere here maybe. Within this range, it might go up here, then come back down. This is also a scenario that it might happen, because since as you can see, is a shoulder head, then maybe there's another shoulder, and then break the neckline. Another possibility. So this investment, this trading style is just sort of like try to guess what are the chances that it might happen, what might happen. So if you try to imagine, do a lot of scenario doing, reading a scenarios type, this is a possible one. Okay, let's see. Meta is a Facebook is also going on a uptrend. As you can see, momentum slows down, goes all the way down here and drops, then momentum slows down again. So we put what we have learned so far into practice. This is a very strong zone. As you can see, they consolidates here, touches the upper range and goes back down, touches the upper range and go back down, and then it breaks up. So this is a good trading method. As you can see here, it breaks above this one and then goes all the way up here. Then it pulls back, serious pullback. Okay, so another thing is this moving average is still pointing upwards. So the momentum is still heading upwards. It's also a good thing. So whenever there's a strong pullback like this kind towards the moving average, is quite near. So it enters this zone, momentum slows down, and there's the blue candle starts appearing. Oh, it should be green for some people, but I like blue for now. So okay, this is the zone that we saw just now, and momentum slows down. It's going to break maybe to here first. As you can see, this is also a zone here, so it should reach here, maybe consolidates a while, then break up again. This is another scenario. Or something really happens and this thing just turn tail and crash down. It might also happen. So we're not going to know what or where or when it will happen, but for now the trend is still up. All the momentum dries up, the downward momentum dries up, upward momentum appearing. So it should be going upwards. If you are on if you are a momentum trader and sort of like a trend follower, you will be trading this kind of, this is a trend. The trend is heading upwards now. So you're going to buy here and then wait for it to go up and hopefully make some money. So we put what we have learned so far into practice. As you can see, the momentum dries up. So we put our stop loss somewhere here, maybe. And then set our target. So first main target is the previous high, which is about 46% gain versus 13% loss. So the risk reward ratio is 3.48. The most ideal risk reward ratio is around 3.5 or 3.7. So this is a very subjective, depending on the person's risk reward. So how much are you willing to risk this to make this much? So some people will be, oh, okay, I'll try to put the low here, and then yeah, you're risking a lot less, 9% here. But then what happens if you're wrong and this someone try to flush you out here, push the price down and cut your loss, you took your loss, cut your loss, and then it goes back up, you'll be having a heart attack. So this is Meta. So we're going to see something else. JP Morgan, maybe. Yeah, this is also going upwards, as you can see. So we put what we learned so far into practice. The momentum is heading upwards. As you can see, the trend, everything in the moving average is heading upwards. But then it ran quite far away from this thing. So that's why there's a big pullback here. So this pullback, although it's quite large, you can see all the big red candles. You see previous pullbacks are very small. So it has been building pressure for quite some time, and then sudden drop here. So this kind of drop, we can expect some kind of V-shaped rebound. So momentum slows down here. Why does the stock stop here? As you can see, this is the reason why. This area, as you can see, there's a lot of candles here. They're having some kind of a pullback area into a support, building up a support area. So this will be a strong support area. When it pulls back, expect some kind of bounce up here. So there is two scenarios that it will happen for now. It might okay, let's see. Yeah, it might go all the way up and retest the previous high, or it goes up to this area, this resistance area, and then breaks down. There's two possibility for this JP Morgan. Okay, let's see some other. Netflix. Oh, this is expensive. Okay, Netflix is very nice trending stock. As you can see here, the moving average is pointing upwards, is a good sign. All the pullbacks are small, which is also a good sign. This is the largest pullback so far. Momentum slows down, and then if you use the same method that I've explained just now, you bought somewhere here. Since there is no previous high, you can change it upwards like this. Put it somewhere upwards here, and at least maybe a reasonable 40% gain, and then set your stop loss somewhere down here. So I think we'll try to end this now. Let's not drag this too long. Okay, just this is the one of the, I think, part one. Let's make this a part one on how do you trade as a professional trader. But then okay, this is one of the main few points that we have learned so far, and by doing this you're actually making some money. But another reason why you can why you should use a lagging charts like this kind instead of the normal candlesticks chart, because there's less interference from the price movement. Too much price movement, you will be confusing yourself. So look for this kind of lagging charts. yes, you sort of like slows down and lag your from actual price movement, but then you can see clearer how you're going upwards and everything. So okay, let's end here. Subscribe, like, and share out my video. Also check out my older video and everything. Try to learn and do more paper trading before you do any real trading. Okay, good night.